So let's start with lithium. Just your broad thoughts on where prices go from here, particularly given the latest development.
Yeah, sure. So Ychuan is the biggest producing areas in China and also one of the most importantly in the global as well. It accounts for around 10% of global capacity. So far, we still don't know how long this suspension will take place. Last year, we had a similar investigation and it took around 2 weeks. So just assuming if it's take a similar time, then I think the impact will be relatively limited. Our view on the lithium is we still think it's an oversupply market this year. We are expecting a 38% increase in the supply globally and a 20% demand increase this year. So we are expecting lithium prices to continue to drop probably to about 350 or 300 level by the end of this quarter and then before it gets stabilized into second quarter. So I think investors can wait a little bit.
What's behind that call? Is it more that EV demand is going to slow dramatically this year? I mean, last year, obviously, there was a crazy year when it comes to lithium.
Yes. So we saw lithium prices hike from 50,000 to 600,000 at the late last year. Yeah. One of the reasons is because of the strong EV growth. Last year, China EV growth was 95%. This year, we are forecasting the EV growth to slow down to around 20%. So from a demand perspective, that's one of the biggest driver on the slowdown. And on the supply perspective, we are also seeing a lot of the new projects got delayed in the past 2 years will come out this year. Of course, if this Ychuan situation lasts longer than last time, and this may cause some of the stabilization on the lithium prices.
Okay, let's look at a broader picture. You're positive on what now as far as materials go, and what are you less positive on?
Sure. We are most positive on the copper and on the aluminum sides, and we are also selective positive on cements. We are relatively cautious on paper. We downgraded the paper into underperform, and we are cautious on some of the energy names, especially like coal.
Why? I mean, everyone's tracking this China reopening story. Why copper? Why aluminum?
Sure. So we think this China reopening is more of a consumption-led China recovery, demand recovery. And at the same time, we are also positive on the infrastructure investment as well. We are expecting the infrastructure investment to go up by 10%. And specifically, power grids, we are expecting power grids demand to go up by about 10% as well. And this will be beneficiary for copper and aluminum because 40% of copper demand come from power grids. And a 10% growth, obviously, is very beneficiary to that. Also, we expect property market to be less bad this year as well. Our house expect property completion to go up by about 10% this year. Last year was a negative 15%. And we are also expecting property new start to have a smaller drop this year compared to the negative 40% last year. So copper and aluminum has around 30% of their demand exposed to property completion. And of course, 40% of copper come from grids as well. So that's why we are expecting copper and aluminum to have a 4% demand growth this year compared to a flat last year. At the same time, on the supply perspective, we see aluminum supply got largely affected recently in China. So China accounts for 58% of global aluminum production. And because of power shortage, we are actually seeing Yunnan, Guizhou, Sichuan has a long suspension of aluminum, at least until May to come back. So that affects about 5 to 7% of China capacity, or around 3% of global capacity. So on the one hand, you have demand go up, and on the other hand, you have capacity suspension. So those were the reasons that we were positive. I think the last point is about coal. We have been very positive on coal in the past 2 years, but we saw coal prices more than double in the past 2 years as well. We are seeing historical high production in China. China production went up by 9%. We are seeing historical high inventory in China as well. And then now this China reopenings means that the coal inventories will have a faster destocking happens, which means we are expecting coal prices to decline. So this will benefit the midstream, especially like aluminum. They're very sensitive to coal prices. So that's one of the reasons that we are positive on,
What about cement and steel? I mean, you talked a little bit already about cement. Just take us through the thinking on cement. And I'm not sure if you cover steel, too.
Yes, I cover cement and steel as well.
Yeah, let's hit it.
So for cement, we are selective positive. We are more positive on the East cement play. we are expecting cement demand to stabilize. Last year, cement demand was down 10%, and this year we expect to be about 1% up, thanks to, of course, a much lower property new starts drop. And at the same time, we are expecting infrastructure to go up as well, infrastructure investments. That's why the cement demand will be more stabilized. And also, if we look at coal is 40% of cement's cost. And obviously, a 20% decline in coal prices will also help that the cement margin recovery.